It's officially bear market time in China. Yes, you heard me right. It is now a bear market in the stock market in China now at this point, okay? We're going to look through all this. We're going to talk about what are China's options out here to kind of get out of that stock market funk. We're going to talk about could this spread over the United States. We're going to talk about what are China's options out there as far as things they could do to hopefully spark things up and maybe end some of these trade tensions. We're going to get into all this, guys. China is languishing in bear market territory amid worrisome trade news, okay? Mainland China markets are languishing in bear market territory as investor concerns over an ongoing trade dispute between Washington and Beijing and a slowing economy weigh on sentiment. The benchmark Shanghai Composite closed officially in bear market, referring to a decline of at least 20% from recent highs on Tuesday. The smaller Shenzhen Composite moved into bear market territory back in February of this year. The Shanghai and the Shenzhen Composites are down around 21% and 26% respectively from their 52 weeks highs as of this afternoon, okay? Obviously, you know, the trade tensions are part of the reason why it's down, and also possibly a slowing economy. In the days ahead, markets are awaiting potential announcements on the Trump administration's plan to curb Chinese investments in U.S. technology. Although messaging on those measures from the White House has proven conflicting, the U.S. is set to impose an additional 25% tariff on $34 billion in Chinese imports on July 6, with duties on another further $16 billion of Chinese goods that are also in the works, guys. Although the macroeconomic impacts of those tariffs is seen as marginal, the trade measures could likely have a substantial knock-on effect given the complicated nature of supply chains, okay? Apart from trade, the slowing domestic economy has led to some concern among investors, with questions lingering about the economic outlook for the country. That also comes in the back of May economic data, including fixed asset investment growth and retail sales missing expectations. Declines in the mainland markets also come as a Chinese currency extended its losses against the dollar. The People's Bank of China set the official yuan midpoint at its lowest level in 6 months on Wednesday. All right, guys. So there's some craziness going on, right? We know the Chinese markets are now officially in a bear market. All right. So we're going to discuss, could this go ahead and could this spread into the United States, and could we end up in a bear market in the United States? We know we kind of been in a kind of just floppy market recently, right? We've seen like we've been stuck around like the 24,000 point area for quite a while now. We peaked around, I think it was around 27, 28,000 back in January, as soon after the tax cuts were announced. Then the trade war kind of came on, and that just kind of took down markets and whatnot. And we've kind of been in this area of like, let's say 24,000, 25,000, somewhere between 23 and 25K, all right? So what are China's options as of right now, okay? We know there are more tariffs coming from the United States right now against China, right? We know, you know, obviously China's been winning that game for a long time against the United States. So we know more tariffs are coming. So what are China's options as of right now, right? They could go ahead and hit us with more, you know, some more tariffs of the few other things we actually import into that country, right? But the issue with this is it's just gonna, you know, come back double in their face, okay? Whatever they do, they're gonna get it twice as bad back in their face, and that's gonna hurt them, right? Because they benefit way more from what they send to our country in the United States than what we send to their country, okay? So tariffs, in my opinion, is not really a real option, but they could go against U.S. corporations, okay? They could go against U.S. corporations, and how exactly would they do this? Well, basically, essentially what they could do is there are definitely some companies that make a lot of money from China because they sell their products or services in China, right? We can think of the Apples of the world, right? We can think of McDonald's and ton of fast food places in mainland China that have expanded over the years that make a lot of profit from China. Starbucks, their biggest market as far as growth going forward is China, right? So there are definitely a lot of U.S. corporations that make a lot of money over there. But here's the issue, right? They could go up against the big dog, right? They could say, Apple. They're going to say, Apple, you are the darling of the United States of America, okay? You're not just the darling of the United States of America, you're also the biggest company in the entire world as far as profitability goes, and in terms of market cap, okay? It's a non-state sponsored company, right? It's the biggest company out there, the creme de la creme of the United States of America. They could say, well, Apple, You're going to make tens of billions of dollars off China this year, okay? Tens of billions of dollars off China this year in selling products, okay? Apple will easily do tens of billions of dollars in revenue from China this year, okay? So they can look at this and they can say, well, Apple, you know what, or United States of America, they're really trying to attack the United States of America, but they can say, you would keep doing tariffs against us, we're going to go ahead and we're going to tax big dog even more. But the issue is, there's already a huge VAT tax on Apple, okay? iPhone in mainland China is going to cost you massively more money than if you just bought it over in Hong Kong, okay? If you buy that same iPhone in Hong Kong, it's massively cheaper than if you bought it on mainland China. We're talking about 20-25% difference in price. It is a massive difference in price, guys. And so they're already hit with this huge VAT tax, basically Apple is, okay? So if you're a resident in China, you want Apple products, you have to pay up a big premium compared to what most people around the world, especially in the United States or even Hong Kong, have to pay, all right? You have to pay up a big portion. But the issue with that is, yeah, that might, you know, scare the United States of America. They might say, whoa, they're going to try to take, you know, one of our big companies down, and you know, China's kind of the second biggest market for Apple now, okay? So they say, wow, they're coming at our big company. Here's the issue, and here's where it gets complicated. Indirectly, Apple employs massive amounts of Chinese workers, okay? Massive amounts. When you think about all these devices that are made, they're all made in China, okay? All these Apple devices and most electronics in general, made in China. But here's the thing, Apple has a lot of money and a lot of power nowadays, okay? Over the past decade, Apple's business has changed a lot, right? They got into China in a moment they needed China, really, because they needed them to produce iPhones and iPads and all these different things in the future, and Macs and all this stuff for a cheaper price than they get it pretty much around the world. But nowadays, Apple has so much money that literally Apple could spend $10 billion on you know, some type of facility, you know, factories and whatnot, to put all their devices together in some third world country, or not necessarily third world country, but, you know, one of these countries that's still developing, okay? They could go to certain parts of Africa, they could go to India. India would gladly welcome them with their arms open, okay? Apple could run the factory themselves, all right? And they could pay the labor themselves, where right now they run through other companies, they have other companies handle that. Apple has so much money now, they could spend $10 billion, build all the facilities, train all the employees, a massive amount, which they thousands of employees over there, train them all, spend all that money. It'd probably cost them around $10 billion, and that's like money that wouldn't even be noticed for Apple, right? Apple's, you know, they make over $10 billion and a quarter in profit, okay? In a quarter, they make over $10 billion in profit. So this number to build out factories and whatnot and get all those jobs and get all those people trained, that's like nothing, okay? And then you got to take into account the amount of cost savings that would save them, because they pay out, you know, big fees to all these companies who have the workforce out there, and they get to use their factories and whatnot to put these iPhones and iPads and on Macs and all this stuff together, right? They can also bring it back to the United States, but as we know, like, they would have to pay the workers a bigger amount of money than they would in China, or excuse me, China or India or Africa or some of these other regions where they can pay workers $2 or $3 or maybe $4 an hour, versus an American worker, someone you might have to pay $20 an hour, okay? So there's a massive difference there. But Apple could do that. They got enough power now that they can say, okay, Apple, you're China, you want to screw us? You want to tax us even more? Fine, dude, we're going to go in another country. Like, we're going to go in another country and build our iPhones, okay? And save ourselves a lot of money, and you're just going to, you know, Chinese workers are going to be out of a job, or, you know, have to do something else, basically, okay? So that's how Apple could attack back. That's a big thing. That's a big competitive advantage they have now. They got the power, they got the money behind them. They say, you want to tax us even more? Okay, we're hitting the road. We're going somewhere else to make these things and whatnot. And you can go ahead and hit us with that. And then see what China says. Maybe we won't do that, right? So now the question is, can this expand? Can this bear market that's going on in China come over to the US? It could come over to the US. We don't know, right? No one knows where the stock market's going in the short term, all right? I can tell you it wouldn't make much sense, okay? It wouldn't make much sense considering the US economy is picking up and expected to be very strong in the back half of this year, okay? So it wouldn't make much sense for you know, us to go into a bear market, although it's possible. If people can get freaked out, they can get scared, and they say, oh, the trade worries, oh my gosh, this is scaring me so much. And it's like, dude, we hardly make anything for anybody out there. It's very, I do agree with Trump in the sense that it's pretty easy to win a trade war when you're the one getting your ass kicked. We've been getting our ass kicked all over the place for a long, long time. What do we say? I have yet to meet a person in real life in my entire life that like makes products or services and whatnot and sells them to China. Like, I've yet to meet someone in real life like companies I own, do they do business in China? Yeah, but as far as like meeting people in real life that like sell products to China, like it's so unrealistic. But in China, it's super common that you're going to know somebody that works at a factory or does something that they ship products to the United States of America, okay? So it's a very different ballgame. I think China's in some trouble in terms of, you know, how they're going to fight this. I just don't see a way that they can win this game. I don't see a way they can win this game in the short term especially. It's going to be a hard fight for them because anything they're going to do, they're just going to get it back in their face twice as hard. So a very tough situation for them right now. But needless to say, even a weak economy in China is still a phenomenal economy. The growth there is amazing still, okay? So even if things slow down in China, it's not the end of the world. So what? They slow down to, let's say, a 4% GDP growth. That's still phenomenal, okay? We would die for a 4% plus GDP growth here in the United States of America. Like, that would be insane. It's like hard to even comprehend what that would feel like if our economy was growing at a 4% plus clip consistently, right? They can grow 5, 6, 7, 8%, you know, pretty historically over the past few decades, right? So, you know, even if their economy slows, it's gonna slow and probably still be a freaking phenomenal economy, right? But I'm just saying it's gonna be tough for them to win this war in the short term, and as far as where the, you know, the markets go in the short term, no one knows. I would just say it probably doesn't make much sense unless the economic data in the United States got weak. If all of a sudden the United States economic data got weak, then it's fair game as far as the bear market goes. But as long as U.S. economic data stays strong, it's hard to really start a bear market here because what is you going to say? We got a trade war going on? Who cares? Like, we don't ship crap to anybody anyways. So that's the bottom line there, guys. I hope you really enjoyed this today. Let me know your opinion in that comment section. I would love to hear from you guys as always. Make sure you follow me on Instagram if you have not already. Thank you for watching. Have a great day.